Cautious optimism on Wall Street earlier this week may set the stage for a full-fledged bullish trend. The long-awaited inflation data soothed investors' nerves and cemented the hope for the Fed's pause in a monetary tightening, though there is still a long way to go until the target level of 2%. Besides, disinflation is around the corner. The stock market traded quietly yesterday, but the benchmark indexes retained their upward bias. The Dow Jones climbed by 317 points, or 0.93%. The Nasdaq closed 0.55% up, and the S&P 500 added 29 points, or 0.67%, to close at 4,439 points. The major stock indexes traded higher in the New York pre-market. They accelerated their growth after the publication of the inflation report, and the S&P 500 is expected to trade in the corridor between 4,440 and 4,510 points. The stock indexes went up yesterday because investors believe in approaching disinflation and the end of the Fed's aggressive monetary tightening. The economic calendar was empty yesterday, and the stock market was thin as investors wanted to play safe before the crucial inflation data. The non-farm payrolls released last week indicated that the labor market remains tense. Comments by Fed's policymakers made on Monday calmed down investors, and the Fed officials advocated for further rate hikes but dropped a hint that the Federal Reserve is opposed to complete its cycle of rate hikes. In this context, Wall Street closed in the green for 2 sessions straight. The market optimism was encouraged by banks, whose shares have been growing ahead of the season of corporate reports. JP Morgan shares rose by 1.6% after Jefferies upgraded its rating to buy ahead of the bank's quarterly report on Friday. Wall Street banks are expected to report higher profits in the second quarter as higher interest payments offset the decline in transactions. The banking S&P index grew by 1.5%. The energy sector also rebounded on Tuesday, along with a sharp rise in oil prices. Shares of video game maker Activision Blizzard were among the leaders of the S&P 500 and jumped by 10% after a U.S. judge ruled that Microsoft could proceed with its planned acquisition of Call of Duty. Shares of Salesforce climbed by 3.9% after the cloud services provider said it would raise prices for some of its cloud and marketing tools for the first time in 7 years. In addition, Amazon shares gained 1.3% thanks to a 2-day Prime Day discount event this week. Futures on the U.S. stock indexes edged higher on Wednesday as investors hoped for a further decline in inflation that could ease the Federal Reserve's hawkish stance on a monetary policy. A series of data released before the opening bell justified hopes for a cooling in consumer prices, and the indicators exceeded market forecasts in all major areas. The annual CPI in the U.S. eased to 3% in June from 4% in May, and the 1% decline beat the consensus of a decline to 3.1% and was the lowest since March 2021. Energy costs tumbled by 16.7%, while fuel oil prices slumped by 36.6%, gasoline by 26.5%, and utilities by 18.6%. Inflation of food, new cars, clothes, and transport services also slowed down. Besides, consumer prices edged up by 0.2% in June after a 0.1% uptick a month ago. The reading also fell short of the market forecast of a 0.3% growth. The greatest contribution to the rise was made by housing prices, which accounted for more than 70% of the increase. Prices for motor insurance, clothing and energy also went up. At the same time, prices for air tickets, communications, used cars and trucks decreased. The core CPI, excluding volatile food and energy prices, surpassed the consensus, and the annual core CPI slipped by 4.8% in June, following a 5.3% in May, though analysts had projected a decline to 5%. The reading is the weakest since October 2021. On a monthly basis, core consumer prices rose by 0.2% in June, also below forecast for a 0.3% increase. All in all, the June data on a consumer inflation will become the accurate barometer for the market. Before the Fed meeting, Wall Street has every reason to regain optimism. In the corporate world, mega cap stocks gained 1.5% and 2%. Netflix shares grew by 0.7% after broker UBS raised its price target for the streaming service. Cisco Systems shares lost 1.7% after Bank of America downgraded the company's rating. Nvidia shares added 0.5% after the Financial Times reported that chip developer ARM was in talks to bring in the mega-cap company as an anchor investor ahead of a planned listing. Several Fed officials, including Minneapolis Fed President Neil Kashkari, who is a voting member this year, are due to speak tonight. Investors will be watching their comments closely, as this is the first opportunity to hear from speakers who have up-to-date inflation data. Obviously, sentiment on the US dollar is the polar opposite to sentiment on the Wall Street, and the ailing US dollar index took a nosedive after the inflation report. It sank to the lowest level in the 2 months before the CPI report. Following the fresh statistics, the index dropped by another 0.6% to 101 points. It's expected to trade in the intraday corridor between 170 and 101.30. The prospects of the completion of the Fed's tightening cycle are taking the shine off the US dollar. The index survived the hints of the Fed speakers about the imminent peak of interest rates, but the latest inflation data worsened the position of the US currency against its counterparts in the basket. After the release of the US CPI, the greenback shed 0.7% against the euro, another 0.4% against the sterling, and 0.9% against the yen. This dynamic comes as no surprise given the position and prospects for further rate hikes by the ECB and the Bank of England. Rumors seem to be growing again that the Bank of Japan will gradually wind down its ultra-loose monetary policy in the coming months. No wonder the US dollar fell to almost a 1-month low against the yen. Later in the day, Fed speakers may try to support the dollar index, but this hope is faint. The American currency prefers to react to data rather than remarks. The Canadian dollar stands tall compared to its battered American rival, and the USD CAD is trading at 0.3227 within the intraday corridor between 1.3120 and 1.3210. The intraday outlook for loonie is bullish. Most analysts share the viewpoint that the Bank of Canada would raise its overnight target rate by another 25 basis points to 5%, the highest level in 22 years. Despite some signs of a cooling, Canada's economy has been resilient, and the housing market has shown signs of a recovery despite 9 rate hikes totaling 450 basis points since March last year. The economy regained momentum in May, having expanded by 0.4% in months after a slump in April. Inflation has been above the Bank of Canada's 2% target for 27 consecutive months and remains sticky, although headline inflation slowed to 3.4% in May, less than half of last year's peak of 8.1%. It remains at elevated levels. In any case, the intrigue will be revealed today. If the consensus for a rate hike comes true, the loonie will strengthen its position with confidence. Meanwhile, the oil benchmark rates grew by 0.6 and 0.9%. Like risky assets, cryptocurrencies perked up in light of the US inflation data. Bitcoin climbed to 30,800, having gained 0.8%. And the token is trying to maintain a bullish momentum, but it looks shaky. Most altcoins are trading higher, except Binance and Ripple. Ethereum, Solana, Cardano, and Litecoin added 0.3 and 2.9%. Binance and Ripple shed 1.2% and 0.2% respectively. Inflation has become one of the main catalysts of optimism in the crypto market. Like other risky assets, it has felt the spirit of the imminent end of the Fed's tightening cycle. As for industry news, the focus is again on ETFs. CPOE registers 5 Bitcoin ETFs with the Coinbase oversight agreement. And this strategic move boosts the trust and strengthens the legitimacy of BTC. Despite the ongoing Coinbase lawsuit with the US Securities and Exchange, the market welcomed the news of a cooperation. So Bitcoin gained ground even before the inflation data. Speaking of Bitcoin's intraday outlook, despite market optimism, the token does not have enough strength to break out of the 30 and 31,000 range. If the asset can overcome 30,800, it will be able to test the height of 31,400. The alternative is a decline to $30,500 and $29,900. Thank you for watching. We closely monitor the markets and provide you with the up-to-date financial information and analysis. We are waiting for your questions and comments down below. Subscribe to our channel and see you online tomorrow.